Hey, y'all, and welcome to the Cash Flow Podcast, where we're going to talk about everything related to the money in your small business. I'm your host, Pam, and without further ado, we're going to jump right into our episode. Here we are at Podcast Movement, actually doing the third in our series of three things to do podcast series, and I have somebody here who asked a really important question, so I'm actually going to answer it for them. I will let them stay anonymous. However, here's the question, and let's see if you relate to his particular issue. You're a new entrepreneur and you're launching a new product, and I'm not going to even say what the product is here, but you're wondering how much you should charge for it. I wrote it down so that I got that right, but this is a question that tons of entrepreneurs have. And what I want you to understand is that there are a number of dynamics when it comes to pricing, and there are three things to do to make absolutely sure you price this right out of the gate. Because you're going to be stuck with it, assuming it's a successful product, or you're going to be stuck with the line you put in the sand for a while. So you really want to think about this question very clearly. It's not a lot of muck that you need to go through to get here, but it is important information to know that you're going to need to get from some of your bookkeeping. There are three things to do. The second one, in my opinion, is absolutely the most important. I'm going to go through the first one, though, because it's critical. Okay. So for the first one, you need to know how much is it going to cost you to get this product or service across the line to the customer. And what happens here is sometimes we absolutely think about that and we go, oh, well, that's easy. Well, let's just pretend this is a physical product. Okay. I'm going to talk to you about a physical product because that's the question that you had asked. So say we sell barbecue sauce, and what you know for sure, hey, it costs me, 8 cents for the bottle cap, and it costs me 25 cents for the jar, and it costs me, $3.40 for the sauce, and I put it in the bottle and I put the lid on it and I package it, and that process costs me another 40 cents. You can add all those things up, and you probably, as an entrepreneur, quite frankly, you know those in your head. You've been doing this, you're a new entrepreneur, you've been doing this yourself for a while, so you know all those costs. And that's an important cost, but one that's often overlooked is you've got to get people to buy that product. So we have marketing for that, right? And we don't often apply that marketing cost to what it gets, what it costs us to create and deliver that product. So what I want you to really understand is to even get that customer, what do I have to pay? And there are all sorts of fancy terms for this. And it depends on whether you're doing paid advertising or whether maybe you're out making speeches or you're out winning barbecue competitions. You want to make sure that you know what that cost is and that you allocate it as well. So let's say that we determine for our barbecue sauce, it costs us for all the ingredients and to get it shipped and delivered, it costs us $4.50. And we also know, though, that in order to get here, you have to go to 4 barbecue competitions a year and be in the top 3 of the folks who are winning them. So since you know you have to go be in the top 3 of the folks that are winning them, and it costs you $5,000 per competition to enter them, there's another $20,000 that you're going to spend every year to sell all these bottles of barbecue sauce. I want to make sure we do the same thing with that we did with the jars and the lids. We want to divide it up over how many we're going to spend and go, oh, that's another $3 per jar. Okay. So now you know your cost. Your cost is, I forget what I said, but let's say it's $5 for all the ingredient stuff, $3 for this marketing. It cost your business $8. The only reason I want you to know that number, it's not because we're actually going to use it to determine the price. It's setting what I call the baseline. So right now, it costs you $8 to deliver this product. The next thing you need to add on top of this, quite honestly, is what profit do you want to make, right? Say that you want to make a 25% profit, and that's not uncommon. That's a pretty standard profit margin. Since you want to make 25%, you want to add that to the $8. So we're going to make it $10. Let's just say we'll do the math. It's easy. The numbers aren't exactly right, but the point I'm trying to make is I know that I don't want to sell that jar for anything less than $10. That'll cover my costs, and then I'll make 25% profit on top of those costs. Cool. So I know $10 is my minimum, but I want you to put that away. I want you to write it down on a piece of paper and know it, but I don't want you to do anything with it quite yet, because now we're going to get to the second thing to do if you're launching a new product. The second thing to do, and this is by far the most important, is to understand the value you're adding to that customer. Because what a customer is going to pay for something truly has nothing to do with what it cost you to create it. The only thing that matters to a customer is what is its value to them. So let's think about this in the example of our barbecue sauce, right? I could play around with recipes for days, but my time is worth something. So if I think it's going to take me 5 days to discover a recipe I like, and I value my time at $100 an hour, that's, 8 hours times 5 days, 40 hours at $100 an hour. It's $4,000 for me to come up with a recipe that I like, right? It's time that I'm not doing other things to generate revenue. So there's value there. What other value is there? Well, you've made it, you've bottled it, you've sent it to me in a way that I can preserve it. You've gotten it to my doorstep one way or another. Either I bought it in a store and brought it myself, or you've delivered it to my doorstep. All of that stuff has value to me. So while it might cost you $10 and 25%, it includes 25% profit, that bottle might actually be worth $20 to me. Because to create the recipe, get the bottles, put the lids on, take the time to do it, find one I like, put it in the bottle. When I add up all those costs, it is way more valuable to me than the $10 that you want to make. This is a weird example because you're not going to pay $20 for barbecue sauce. Well, maybe it's a big old bottle. Maybe you are going to pay $20. But now what you have defined in the first thing you're going to do, you define the lower end, which is $10. Now you've defined the upper end from your customer's perspective, which is $20. Okay. That's the range I want you to understand really solidly before you ever price your product. And by the way, this works for services as well. Okay. We can take an example of a service here as well. So say, for example, you run a group coaching program and you have to pay a coach to run the program for you. And you have to pay for a workbook to be sent and a gift to be sent to the client and your marketing expense to get a client and understand as well. When you add all that up, those costs come to, let's call it $3,000. And you want to make a 33% profit on that. So you're going to sell this for $4,000. No, you're not going to sell this for $4,000. Pause. What I want you to do is write that number down. That is what we call your minimum price range, or the minimum of your price range. Okay. So now what though? The service that I offer is to tell people how to triple their cash flow by looking at things they don't even know to look at on their financial statements. So I know that when we have this conversation, for example, that I'm going to save them $40,000 or $50,000. Okay. Whoa, I'm going to save them $40,000 or $50,000. That's amazing. Now, let's just pretend that's the maximum of that range. So we've set the minimum of the range and we've set the maximum of the range. What you now want to do is pick somewhere in that range to sell your service. So here's the thing. Now is where we get to thing number 3. Okay. So thing number 1 is know what it costs you to put this thing out there. Thing number 2 is know what the value is to your customer. That thing number 1 sets the bottom number of your range. Thing number 2 sets the top part of your range. Okay. Thing number 3 is where do you want to fall in that range? And here's where you decide whether you want, and neither one of these is right or wrong, first of all, but here's where you decide whether you want to be a commodity in that market or you want to stand out as like the white glove version of what you're selling in that market. So if you want to be a commodity in that market and you want to compete on price, which is, again, not a bad thing at all, and this is how Walmart makes money, right? Then you would be at the lower end of that range that you've defined in thing 1 and thing 2. And if you want to be the person that stands out in this market as the highest quality out there, you would price yourself towards the upper end of that range. Now, you don't want to wipe yourself out of the market, but you would move higher on that spectrum. And here's the thing you need to understand if you're going to push the price higher. If you're going to push the price higher, you need to know what differentiates you from the pack. You need to know what makes you not the commodity. Okay. So you need to have a very clear understanding of your avatar, who you're selling to, and you need to know what makes you special to them and worth the higher end of that. You could probably have fewer customers, but they're going to be paying you a lot more. If you're on the commodity end, if you're on the other end of the spectrum and your price, you've decided you really want to be a commodity and you want to sell more things at a lower price, just make sure you've covered all your costs and the profit that you want to get. So those are the two warnings at each end of the spectrum, and you'll probably fall somewhere in the middle. So hopefully what we've done here is given you 3 things to do when you're about to launch your new product, like my friend here, and I hope this has been useful to you, is number 1, know what it costs you, all in, everything that it costs, not just the cost of the product or the service, but what it costs you to get the client. Thing number 2, I want you to know what its value is to your customer. Take the time to do this exercise. It's so important. Those thing 1 and thing 2 are going to define the lower range and the upper range of what you need to price in. Thing 3 is decide where you want to fall in that range. If you fall at the higher end, what differentiates you so that you can clearly articulate that and get that money for what you do. If it falls at the lower range, are you going to be able to continue to compete at that level and still cover all your costs? So that is the 3 things to do when you're launching a new product. Thanks for joining us. I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.